Good evening. This is the Elliott Wave daily update for the Nasdaq 100 and the S&P 500 for Wednesday, July the 24th, 2024. It was a direct follow through. And where I want to start, I'm going to start with the Nasdaq. I'm going to start on the hourly chart. And when I get over to the S&P, I will be discussing what I am referring to when I start talking about when it breaks a particular level, or I'm talking about a put wall, or the different things that affect our markets in terms of gamma flow, order flow, money flow, and what happens when those levels are broken, they're violated, they're negated, and then what transpires after, because it happened in both markets, and the follow through that we saw was in both the Nasdaq and in the S&P 500. The reference points were such as a put wall, for example, volatility triggers, another, combo levels, where in other words where large gathering of gamma sit, and what happens when that level is penetrated and broken. And quite frankly, what happened in the NASDAQ was that it happened on the opening. So the NDX, let's just go over and just take a reference and take a look at it. Look at what happened. Yesterday's close, today's open. So it was a huge gap, and it went right through the put wall. So there was no choice. There was no like, okay, how do we get around this? It just was going to go down. And there were moments initially, very, very initially in the market, where they were throwing out, there were few buy orders they may have had, but they were pretty good. In other words, they ran the market. We had, for example, we had Coinbase, we had CrowdStrike, both pushing higher in a recovery type of a deal. And then as you can see, that both actually closed pretty well down. CrowdStrike down 1074, Coinbase down 1257. After both being up between 5 and 7, up in those areas, $5 and $7. So it was quite the turn. And when it really kicked in, it just really kicked in. And you can see 1, 2, 3, 4, 5, 6, basically 7 hours of downside. 6 for sure as the market was open. Now, it really does a lot. So I'm not going to spend much time on the NDX because I do that over the weekend. And so expect this all to be updated. And now I'm going to go back over. So that's what happens when a level that should provide support, in other words, when the reason it's providing support is because there's a bunch of short puts right at that strike. And it's not going to be pretty if it drops down through it. Because what happens is everybody who's short the put, they become longer. Their position, they get longer. And so they're selling into weakness. And that just aggravates the weakness. And it pretty much was, again, very focused in, of course, the tech sector, very focused, again, within artificial intelligence. And again, I just want to say, in my opinion, really what it is, it's called an adjustment. These are price adjustments because I believe the market has a tendency to get ahead of itself, way ahead of itself. Yes, artificial intelligence is finding its way into just about everything. And all of the major players are very much hard at work and putting in a lot of money to develop product to fit artificial intelligence within their space. So what I mean by that is Amazon, Google, Apple, Meta, Microsoft, Super Microcomputer, NVIDIA, etc. Each has a part to play within the artificial intelligence space. But it went so fast, so hard for longer than it probably should have. And now it's just adjusting all that money. So it's like, okay, some people are going to be losing because they're in it for the long haul, blah, blah, whatever. So again, my position is I don't really care if the market goes up or down. I just care that if I am able to read the signals and participate. So what I'm trying to do here is bring signals that I receive into the light to show you this is what happens when that gets violated, when that gets invalidated, when it gets broken through, however you want to term it, we get this type of a move. Again, unless you're a bullish or a bearish trader, you should be able to, you don't care. You just want to participate. And participating is a whole nother game, which is why I now, again, am focusing more on the trade room and on day trading. Now, back to the chart. So we broke through that put wall. We just started to tumble, and we continued to tumble pretty much through the day. Now, I've made one adjustment because I feel that we did kind of come down and put in the minuet, wave 5, to put in minute wave A. Remember, we're in a minor fourth wave correction, and it's going to consist of 3 waves of minute degree labeled A, B, and C. Now, one adjustment here in the Nasdaq that may occur, I went over, I looked at it, I really checked it out, and that would be that this actually gets extended. So extends one more time. So in other words, we are coming down 1, 2, and then it breaks 1, 2, 3, 4, 5 to complete the 3. But there's a chance that it could be 1, 2, and then this all puts in the 3. And this 4 goes to here, so it breaks in between. I don't like it, which is why I'm not changing it, but on some, this is how they're kind of putting it in. So the subminuet third wave gets placed down here. This gets placed down here. So there are some that are believing that what finished today, likely, and I'm not actually declaring this over, I'm just filling it in right now, is that the third wave would be finishing, then we still get a fourth wave, and this becomes an internal fourth wave, a subminuet fourth wave. I'm not making that change, but I'm leaving it out there, because if we get a mediocre little ride up, but putting the third down here, that would suggest much higher, because we'd be pulling from here to here in fibs. And so we really would be looking for it to come back to here, which is above 20,000. So we cannot forget that yesterday, this decline began off of 20,084.75 yesterday. So we have tumbled pretty far. In fact, I wrote it down, just got to find it. These notes that I keep, I'm telling you, sometimes I misplace them and I'm like, okay, where am I? Oh, wave 5, which is this one, is 916. Wave 3, which is this one, is 1,073. So if we began at 784, it's 916 points from yesterday's high. That's a lot. That's a lot. And while the bounce up off of that low, which was at 19,168.75, looks like it could possibly be the beginning stages of a B wave. Before I do that, you might be going like, Michael, what's that red line? I want to show you, because this is just updating where we are. Here's the red line, today's low, to getting into this box, which is what we're looking for in the minor 4. That minor wave 4 will find its terminus within the price territory, or towards the end of it, of the previous fourth wave of 1 lesser degree. And here it is. This is a minor, 1 lesser, minute. So we're looking for it to get into here and doing a damn good job thus far. So if it's only wave A, we got a B wave rally, and then we have a C wave decline. That I'm feeling pretty stronger that the C wave will get us into here, if not all the way to here, if not maybe even a little bit further. So right now, I'm also leaving up the fibs that go along with the wave 5. And then what I've done is like 1 to 5. So we've already gone past 100%. And so that's the equality. So that part accomplished. And let's see what this bounce ends up doing. Because I have to go deep inside or just take a look inside to see, did we really do 5 down, or do we still, because this is the way it played all day long. You did an impulse and did 3, impulse, then 3, even if the 3 was small, impulse, then 3, and they just fell and fell and fell. So it could be the same thing. So I'm looking at to see what the structure could turn into here. And I'm looking at a 15-minute chart. I mean, it gives me nothing in terms of like, well, what could it be? Well, that's what it is. Nice jump, but you can see 3 and a tumble, 3 and a tumble, all the way down. So we don't know yet. Is it done? Or do we need one more? So, I mean, you can sit and you can count all of this out on a 15-minute chart and do a really good job and go all the 1-2s in here and all the things down, and you'll be down to a very, very fine level in terms of degree. And you got to build it all the way back out, because what you got to come up with, what is it? Is it the 5 complete from there? So it's got to be 5 waves down to complete. I'm thinking it is. Or is it just the 3rd? This is the little 4, and we have 1 more down. And we do get to 19,035. How big of a stretch is it when the low is 19,168? 135 is 130 points. That's how close we came to getting 1.618. And then being even closer to the beginning of the box that we're looking to get into. Okay, so if it's wave 5, let me go back out to that hourly chart. So now we're going to start to add some fibs for the B wave. So we got to go all the way back up here, and we're going to draw retracements. And I'm going to put them in that color because that we're looking on that degree. So I'll leave that there for now. I'm going to just put them all up there so that we can see it. And 100%, well, it's going to take us all the way back. And we don't want to go all the way back. Okay, say okay. So for a B wave, I think we should definitely get above 0.236. So that's quite the travel because we came down so hard. So 0.236 retracement of everything we've done thus far off of the all-time high up at 20,983, almost 984 to here. 0.236 is 19,597. So you almost say 19,600. Nice rally if you can do it. But B wave, notorious, can go from 382 to 50 to 618. A B wave can go all the way back to here, as a matter of fact. A B wave can go almost 100% and make all of this flat. Now, I would not be looking for a flat pattern because the A wave is impulse, is 5. So I'm looking for 3, and it's going to tell me right in here's where I'm looking, 50 to 62, but starting at 38.2. Right up into here is what I'm looking for. And it's going to come up in an A, B, C of minuet degree. So we're looking for that, and we've got room once it gets going. Now, let's not forget, we are still in earnings. And as we move out, so we have tomorrow, we've got some numbers, and I'm not sure of like who all is reporting. But then Friday is an options expiration. Yep, yet again. And more earnings, but they will come before the market opens. And I don't know of any real within the Mag 7 that report pre-market, but a lot of other things do. And so we could get some reaction off of that. And then into next week, we start to get some of the other big boys. I think we have Microsoft coming out. Let me see, Meta, I believe. Meta's on the 31st, which is the week after. Microsoft is on the 30th, which is the week after. So yeah, so all kind of coming in next week. So we do have the rest of some of the bigger boys, and they could produce maybe a little bit more satisfying earnings, and we get that bigger boost. Now, kind of play this out psychologically, because the market is desperately hungry for something that's going to report good earnings so that they can take a jump, they can jump on it. And what we've seen is like, that's exactly kind of the thing. I've watched some of how earnings come out, and the algorithms are set. It's like, if you got beat and all of the click words and they all fall in a row, buy it. And they do. And a lot of times it's not correct because they come back during the conference call and kind of just go like, well, yeah, but things are kind of slowing down, whatever. But the market is desperate for something good. So if Microsoft happens to come out and does a good thing, then I would suspect that the trade would be like to scoop up Microsoft as fast as hard as you can. And then we'll see a turn to what is left. So in other words, what out of the Mag 7 are left? What out of artificial intelligence is left? We're still going to have NVIDIA. We're still going to have Meta. We're still, etc. Amazon, AMAT, Apple, AMD, still to report. So you get that overflow, and that could help also produce a B wave. That would be quite dynamic. Now, here's the thing. I don't find it such a difficult thing that we have to flip our mindset to just participate in the upside because, well, we've got all this bearish stuff and now we have to turn bullish. It's like, drop the precursor, drop the adverb, adjective, whatever you want to call it, of I'm bullish, I'm bearish. You don't care. If you're a day trader, you don't care. You just want to catch the moves. And believe me, there are times inside you're going to be like, oh, guess I'm bearish because it's just going straight down. But all you're doing is catching a downside move. Okay, so put in moving averages on the hourly. I'm going to leave these up, but I'm going to clean it up a little bit. Don't need the 0, and I don't need the 1, and I'm not looking for 786. So just got to close it down into my window here. And moving averages doing exactly what? Here we go. We broke below the 200 quite a while ago. So guess what? We are back in a downward follow through. See it? There's the 200. This is on the hourly. There's the 200, there's the 50, there's the 20, there's the 13. And the 20 and the 13, along with the 200, are kind of just like have jumped off the cliff. They're falling. Now, I expect if we get a decent rally, they'll come and go flat first, providing some resistance, but then eventually, with persistent buying, of course, then they'll turn and they'll rise. But these are my zones. In fact, this is kind of the zone that I'm looking at. And remember, A, B, C, 3 waves. Okay, let's go over and take a look at the S&P. Yesterday and over the weekend, I would talk about the options flow. I talk about where a call wall or a put wall may be. And I know there are people that are like, oh, who gives a what about a call wall or put wall. I'm now going to explain to you why we should, if you're a day trader, it could behoove you, and even if you're just even going to go collect a quick swing trade on a day like today, and you're using options, good information to have. Now, in the S&P, the market came in sitting just above 550. And trust me that all the larger firms and trading people knew that 550 in the S&P and the ES needed to hold. If it started to break, it could be a very quick ride down to 5,000. And I'm pretty sure that's exactly what I presented. Now I want you to see it. All right. Here is that 5550. And the resistance was 55.50 to 55.60. So it got below it, and then it just started to accelerate because it broke. It invalidated that put wall. They jumped into action. And then what they had to do, accordingly to their Greeks, is you're getting longer as this thing is dropping. And now it's beginning to accelerate. So you're getting really long, really fast, depending on your position. So you have to sell into that weakness, and you do. And it keeps going. Now we can take a look at the SPX. Same deals in the Nasdaq, folks. It not only broke below, I think over here was 5,000 for sure. But there was another point just above all that, and it just kind of, it opened below that one and then got right here. That was the gap. That's where it opened and then just went right through it, right through it. So it gapped and broke right through that. So the power of the selling punched a hole right through it, and it kept going. Remember what I said, that in the SPX, if it should break below that put wall, it could be a very quick trip down to 5,400. Well, what's the low today? 54.45. Excuse me, 54.19, 54.20. 20 points. And SPX down over 100. So this is what I'm talking about. And why is that valid information? Well, as a trader, wow, you just short it. You go short in the spiders. And if you're trading the options, well, then there's technique, which I'm not going to delve into here. You know, which strike, how many, or whatever your situation is. You know, how do I get my best bang for the buck type stuff? That's more trading. That's what I'm beginning to say to you guys. I offer in a trade room. Okay, so back to here. Let's take a look what we're doing. I'm going to back out of here because, again, I'll update this over the weekend. But now I want to go back and I want to take a look at the ES, which, of course, did the same thing. And when it broke, it tumbled. The equivalent level here was 55.30, I believe. And once it broke, look what it did. Not only break there, but it went right through 5,000 and ended up with a low here in the futures market at 54.62 and bouncing only back to 83. Decent bounce, yes, I see that. But is that the bounce? Are we now coming in? Am I going to be able to put a 5 here? So again, on this one, and I did, so you can see that I have marked it, but I'm not sure that it's done. And I'm going on the basis of 1 to 4. Now, before I had done this a little differently. I called this wave A, but then I thought, no, I can't. And it's because of this. That can't be A and that can't be B, and we're in a C. Because again, I'm going to go out. I'm just going to take a look. How close are we to here? Well, we're not that far, but I'm looking for it to go to the terminus, which is the April low. And in the cash, that's 49.53. In the September future, that is 5,062. Well, we've cruised under 5,500. We might end up finishing this closer to 5,400, put in a B wave, and then come back down in a C wave and at least get into this 52.77 on down to that level, which is 50.62, down to the 382, which is 5,000. These are major levels that on this one, 5,000 has held since the April low. So when you start to put together what they're doing as far as trades, you can start to look at this and go like, well, they're using that as a low. And as they walked that trade up, the volatility trade, as they walked it up, then you got put walls going all the way up. And you got call walls above all the way up. as the options trade. So in other words, it's like the support level that should not break because it's building up quite the position rises. And when it breaks, if it doesn't break, they'll continue to do that trade. And it just pushes it up even further. But when it does break, you're going to see how they need to, some reverse out of that trade, cover that trade, adjust that trade, whatever, how big. So a lot goes on. But trust me that it all involves, if I'm a dealer and you're coming back to me now to sell me back the call that you bought, or to buy the put back that you sold, well, that leaves me in one position. Now I have to sell. I have to reverse my position, which actually is going to be making money, by the way. So, because if you're just short the put, you're getting screwed on when it breaks the put wall. If you have it in a position, you're likely you're okay, but so many people don't. And again, it's because they're breaking the level that should hold in order to keep the way that they're doing the trading, the dispersion trade, to keep that in action, they have to be able to sell the VIX. Well, look what happened to the VIX today, folks. Oh, they took that one out. The cash VIX was up 332. Now, do we think that somewhere within the market that trades in that futures market, that there was some covering of being short the future? Now, it was Wednesday, so I know that something, we had a weekly in volatility. It released it. It released it. So if it was being suppressed because of the positions, it got released today. Volatility options settled. It got released. And what happens? It goes up. It expands quite a bit. So again, positions come off. Now you got to do the other side. Because don't forget, they take that vol, they take that cash, and they put it into the underlying volatility, which is like the buying calls. All right. So I want to go back down. That's why I'm giving this information, because if you can put it all together, you're trading, you're going to get your signals. You're going to get your signals from different sources. Now, here we go. In the futures market, I am marking this as complete, but we must leave open the potential that we go down the full 2.618. So we've now, let me just take this off because it's no longer needed. 618 exceeded, 1 exceeded, 1.618 basically exceeded, but I'm going to leave it there for right now because see where it stopped? Right below it. So I'm going to leave it there because maybe it is providing some resistance. And then we swing back down and we get below 54.62 to put in that finishing move of 5. But the support on fib level comes in at 53.95. So we got it all the way down there. Now, if we're going to go up in a B wave, so I'm leaving these here. So I'm going to get a little congested here, but stick with me for a moment. Let me open that up, because all we're going to be looking for is, do I have it? Can I get it on the 15 so I can get my, no. You see how much it happens? And so you got to go here, but I can open this up and I can go right there. And I'm going to, this, and go back down to here. All right, so here, what we have now, let me just make this nice so that it's easier to see without all of these lines. And I'm going to go turn all my color because they should be, if it's going to be a B wave. That, and that. Okay. So there, cleans it up a little bit. So here's our box. Here's our window. If indeed this did complete, that low completed minute wave A of minor wave 4. So then we're going to come back up. 236, 55.23, 382, 55.61, 50%, 55.91. Could we dare go back and test 5,600? We can. We can in a B wave. Absolutely, we can. Now, again, same basis. I'm not looking for much more than that because we started by going down 5. So that makes the A wave an impulse, 5 waves down. So you're going to be looking for a B wave that's 3 waves up, but not going to produce a flat, which would take us all the way back up to that high or in that area. It's not going to produce a flat structure where, the start of A equals the end of B, etc. And then what we'd be looking for is a C wave back down to this level to then complete minor wave 4. But I'm not looking for that because I got 5 down. Now, could you really kind of go with like A, B, and this is a C? You could. You could. But I would say that the C wave's not done yet. But you could. So right now, I'm going to kind of leave it as a 5. This is a little bit big, and I get that. But it doesn't break any rules. Got close, but it didn't break a rule. So whether it's going to be an A, B, and this is the C wave, then this could just be one of C. So it depends on what you're looking for to come next. Because if it's just one of C, you're just going to get a small wave 2. Maybe it gets back to 5,500, 5,512, maybe up into here. And then comes flying back down in the third wave, which will make this look like, I don't know, childlike. That's what it should. Now, I'm going to stick with the B wave. I want it to be nice, formed, and then, so I think we just give a little bit of time. A lot of positions will be reinstated, et cetera, et cetera. We see this all the time. When they come down, they smack it hard. You see the rush to get back in. And that may come tomorrow. But again, what I want to tell you is that my belief is it's like we need to get a stellar, a barn burner, a blow the doors off type earnings report from one of the major players or a higher capitalized stock. One of the big boys. And there's many of them in the Nasdaq right now, but we have the Mag 7, and they count. Why? Because of their weighting in the index. And with the weighting in the index, that's going to produce that bigger move. So, and the market will start to relax. Like, whoo, the downside's done. Look at these earnings. They're coming in great. And I'm going to tell you, if you keep all of that out there and don't care, and you go by the technicals, what your numbers are telling you, you have so much to trade. You have plenty to trade. And you just get along with life. You don't have to think politically. You don't have to think geopolitically. You just think numbers. All right. Moving averages in here. So just to kind of finish up here with the S&P, let's see how this builds, if it does. If we get up and we don't get much past 55.23 and we start to head lower again and it's only 3, then it's just going to be an internal 3. And it could be a 2. This could be 1 and this could be 2. Or we may be coming down and we got a 3 and this is a 4 and we still got one more 5 to do. And that's the case. Here's your number, 53.95. So I'm not looking for another devastating day unless this truly is just one of 5. And we're going to come up in a 2 and it's going to come. Or that 3 somehow gets shifted down to here. And we come up in a 4 and we come back in a 5. But, I got the Nasdaq that I think would have to fall into an agreement with that. And in the Nasdaq, it looks a little bit more like it is completing that 5, and the A, and we're ready to kind of put in a stronger bounce. But we may need a slight new low. That's why I've got this one. So that one we'd have to accept that they got one more. And they could do this overnight. We got Europe, we got Asia. Everybody's got to, put in their vote. So moving averages. I got the 200 turning. I got the 50 turned. And you see they're lined up. There's the 200, there's the 50, there's the 20, there's the 13. That's the hourly chart. I can flip it over to the daily and go like that. And still got the 50, which actually has gone flat. And so is the 200. See, this is what happens. You get more time, right? This is a much slower boat. It goes flat first, and that's going to actually provide support. And this, they've gone back to the 50, and it should now be a little resistance. It should be a little resistance. That's at, come on. That's at 54.89. Let me bring that down to the hourly chart. 54.89. Oh, it's right here. So if it breaks back above the 50, it's going to throw a little bit more positive shade on the market, at least on a very short-term basis. If it can't and it starts to go back down, then that 50 is going to turn with it, very likely. So in any case, going back just quickly to the daily and opening it up, yep, everything's kind of lined up. We've got the 50 and the 20, and where is that 20? 20 is at 55.85. So if it starts to go and turn and just go get out of the way, well, that's going to produce that negative. But right now I'm looking for a B wave, and it likely would turn and start to fall and maybe break below once we're up with the B wave. That's my thought. All right, I'm going to finish it there. Tomorrow now, what we have in terms of economic data. On Thursday, we have GDP and initial jobless claims, durable goods, all at 8:30, and then that's it. That's it. We get it all at once. And they're coin tossing on what may or may happen, may not happen. So we're going to have to deal with whatever they choose and whatever algorithm kind of jumps and moves. I'm there and I've got my screens open and everything, but quite often I don't trade the number, because it's like, algorithms get crazy. It goes zing and zing and zing and zing and again everywhere. So I normally will wait, but we'll see how the stocks are going to open because they'll line it up. All right, next update will be on Thursday, July the 25th.